You know that feeling when someone shows up for you just when you need it most? That's what Uber is all about. Not just a ride or dinner at your door. It's how Uber helps you show up for the moments that matter. Because showing up can turn a tough day around or make a good one even better. Whatever it is, big or small, Uber is on the way. So you can be on yours. Uber, on our way.
Reality radio for a really great future. We're talking real money.
Hi again. Welcome to Talking Real Money, the show about your dough. I'm Don. That's Tom. Our number is 855-935-TALK, 855-935-8255. If you need help trying to figure out how to build the wealth you need for the future, if you're looking to avoid somebody who might be doing something that isn't in your best interests, or anything else, give us a call, 855-935-8255. It's free, and it's really, really easy, and we'd love to hear from you. Now,
things we hope we never see again.
What?
Right?
Snow?
Well, like that Snowmageddon. We hope that was horrible last year. I mean, it's just forget it. I know it's pretty okay.
Let it snow, let it snow,
double-digit
let it
inflation.
snow.
You hope you never see that again, right? I mean, because
Right.
that's
No, I don't see
it's hard to deal with.
Yeah.
And you can add one more to that list.
What's that? What is it?
I want to wait for the shriek.
Oh,
that
wait.
We'll be able to hear all the way
Wait.
from Central
Okay,
Florida.
go ahead. All right, you guys tell me.
Non-traded real estate
What?
investment trusts, non-traded REITs.
Are
we
you
thought we had buried
Wait
back
a
in
minute.
the desert with that nuclear waste. No, they're still here.
Who
they're getting
wouldn't
big.
want, who would
Yeah.
not want an investment that you cannot get out of when you want to?
Right.
An investment whose value you won't know. And,
Until
come
you get
on,
your money back,
as
hopefully.
an added bonus, costs more than almost any other investment. Why
Yeah.
wouldn't you
and-
want that?
And you can pay commissions ranging from 5 to 13%. Sounds
it
good.
sounds perfect to me. I don't know
Yeah.
why more people aren't just buying up non-publicly traded REITs. Who the heck is selling these things?
Well, you know,
What
okay,
idiot is out
there's-
there selling these things now?
You wouldn't believe
Which
it.
of you incompetent financial advisors?
Blackstone has
Blackstone?
non-traded REITs now.
Wait.
You've heard of them. Starwood. You already know who Starwood is, of course.
Starwood?
But, yeah.
Wait, didn't Blackstone own like SeaWorld or something? Yeah, they did. Blackstone owns
That I don't know.
SeaWorld. Yeah.
Well,
Really?
you can buy into these things, and you get an annual dividend of more than 5%.
Woo!
Which, by the way, you know where that dividend comes from? Oftentimes.
Your principal.
Some, but you know where the rest of it comes from? I find this fascinating.
Income from the real estate?
No, well, some of it, but the most of it comes from new investors. Doesn't that sound like,
Ponzi.
yeah, kind of weird. So yeah, they're touting 5% dividends. They're touting big returns, and they're saying, by the way, this I still love this. You don't want to own bonds because they're only paying 2. You want to put your money in a great investment like this that'll pay you 5.
Oh, sure you do.
And
Sure
so
you do. I'm looking
no.
up the Blackstone Real Estate Income Trust. Wow.
$100 million a month are going into these things. $100 million a month.
And if you buy it,
Big money.
If you buy it, the commission,
How much on that one? 5?
8.75%.
Well, the guy's got to make a buck here or there.
This is
A lot of bucks.
ridiculous. You know that there are going to be people lining up to sell these to you.
Oh no, they've been selling them like hot cakes
I
because low interest
bet.
rate environment.
Yeah, and
You can
you can withdraw money after the first year, but you'll pay a 5% penalty,
sounds familiar.
and it's
By the way,
leveraged.
you can. By the way, here's the other really great piece of news, Don, that you're going to be so happy to hear.
Yeah.
You only have to have $2,500. Kelly, she got that. She's going to hand that to me right now, right? She got that right there in her purse. $2,500 is
That's
all
right.
you need to step
I'm
right up and get in it. Boom.
I'm looking at the $2,500 minimum
Yep.
investment. That's incredible, and
Yeah,
yet
it
you
is.
still have to be a qualified.
I don't know what that means.
The qualified in this case is a net worth of $250,000. This is not very qualified.
Heartbeat.
Gross annual income of at least $70,000.
Yeah. Okay.
Wow. Please don't get into
Okay,
these.
so let's just for a little historical look. Did anybody remember like 2007 through 2009? Yeah, stocks had a pretty rough time, but there were clients of ours who had gotten into some of these non-traded REITs. You could not get out. They were not liquidating. They would not let you get your money back. The dividend payout went to, 0. And then when you finally did get your money, it was less than what you put in. The value of all those properties they said they owned. There is no reason to own one of these funds, period. If you want to own REITs, which I think you should own because they are a diversifier in your portfolio, you can go to Vanguard and own the VGSIX, the Vanguard REIT Fund. No, the yield is not 5; it's 3.25.
Actually, it's VGSLX now because it's the Admiral shares.
Oh, the Admiral shares. Okay, so you can buy that at a very low cost. There's no commissions.
0.12%.
Yeah. Give me a break. Give me a break.
And it's liquid. And the yield.
Get your money.
The yield is 3.4%. Better than a bank,
There you go.
but there's still risk.
Tom and Don are talking real money.
Do you need a little help with your investments? Set up a free, no-obligation appointment with one of our advisors at TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
Interesting little factoid. I just find this fascinating. Vanguard's REIT fund is an index fund, so
Right.
the holdings are based on the size of the companies, the market capitalization of the real estate investment trusts they own, and the largest real estate investment trust in their portfolio is American Tower Corporation. They own a ton of cell phone towers.
Which is, you think about that 30 years ago.
What a
they're
great
very
business.
tiny. Yeah, now today, big.
It's the
Interesting.
biggest.
So, yeah.
It's the biggest.
So if you got to own REITs, and I think you should, and by the way, you should only own them in a qualified type account. They would not be a good thing to own in a taxable account.
Because they're taxable.
Well, and they got REITs, as you know, by law, have to pay out 90% of the earnings every year. It's
Right.
not, it's just not the way to do it. It's poor tax planning. Own them in an IRA or a 401k. Don't buy a non-traded REIT. Go on Vanguard's REIT fund. It's terrific.
And cheap.
Diversified, low cost. and
0.12%
Yeah,
per year in
that's
expenses.
great way to
no
own a lot of
commission.
stuff.
Holy
Yep.
cow. You know, it's funny. Simon Property, which used to be one of the top 2 or 3, they own a lot of malls.
Yeah.
They've slipped down to number 5. Yeah,
On their
number
way
5.
to number 150.
Yeah, because malls are just, they ain't what they used to be.
No, they're not.
855-935-TALK. Give us a call. We'll help you deal with some of life's complex, confusing money issues. And Scott, you're up next. Welcome to the show.
Hi, Tom and Don. How are you?
We're doing great. How can we help you?
Well, I am 55 and would love to retire within the 10 years. I have a rollover IRA that I'm heavily weighted, and it's been good, but I'm heavily weighted in the Fidelity Growth. So, and have been for a long time. So I probably have 90% of my money is in Fidelity Growth. At this point in my life, any recommendations on diversifying?
Yes, diversify.
Hesitant with the market.
So is it 90% in that fund and then 10% in bonds?
No, I have Fidelity Growth, and they're all aggressive.
Yeah.
Fidelity Select Software and an extended market index.
Those are all stock funds, by the way. That's what I was asking you. You have no fixed income.
No.
Okay. So that's an aggressive portfolio. Even setting aside the type of stocks you only own stocks. So you need to expect in the next bear market to lose half of your money. Are you okay with that?
No, I'm not. That's why I'm making the call.
That's a good thing. Glad you're making the call. Let me just tell you a couple of interesting little things about the fund you're in, Fidelity Growth. One, heavily weighted toward growth stocks. It is, like we were talking about in the last hour or last podcast, it's been hot. Growth stocks have been hot. You own almost no value. Plus, they're all large company growth stocks.
So you own a lot of Apple, you own a lot of Alphabet, you own a lot of Microsoft,
that
you own a
interesting?
lot of Facebook,
Yeah.
and you own a lot of, I think it's a company called Amazon. I mean, that's the problem. I'll bet it's
Apple,
almost 20% of the portfolio.
Apple, Amazon,
Yeah.
NVIDIA, Microsoft, and Alphabet alone are more than
How
20% of the portfolio.
Yeah, I knew it'd be a lot. So is this money custodian held at Fidelity?
I guess what do you mean by that?
Well,
Do you have
the
other
Fidelity
choices
fund.
outside of
Well,
Fidelity?
yeah. Or is this in a 401k, or is this in a retire? Tell us where the money is.
No, it was a rollover IRA. That
Okay,
I
but who's the holder?
so
Who's the holder
I
of
can
the
move it.
money? Who's the holder of the money?
Who has your account?
Fidelity.
Okay.
It is at Fidelity. Okay. So because I don't really know of a Fidelity, do we have?
Yeah, we do.
Oh, Don's got one. Yeah, Fidelity Global Stock Fund.
Well,
Yes,
there's not
the
a
answer
global.
is-
You have to mix a U.S. and international
Okay.
to get.
Yeah, I mean you're limited. You have a lot of your money in a very few stocks. You have a lot of your money just in large U.S. firms. Do we recommend that? No. Have you been great the last few years? Yes, it's been terrific. And this is a good time, by the way, to rebalance out of that into some other securities. Go ahead, Don.
Let me just tell you a couple other little things about your fund that you're not going to like. One, the expense ratio, ridiculous at 0.85%. That's really high for a no-load fund.
In today's world,
And
yes.
it only owns 333 stocks.
So give them the two stocks that we've
So-
recommended Fidelity.
Yeah, we've got the Fidelity Total Market Index, which is a U.S. fund.
What's the ticker on that?
Fidelity Total Market is FSKAX. Get this. You want to see what a difference in expense ratio makes? The expense ratio is 1.5 basis points.
What? Wow.
1.5.
0.15.
One-
That's the U.S.
That's-
FSKAX.
Right, and then let me find
Okay.
the total
And
international.
but we're going to recommend a bond fund because I don't know you, but I still think if you're going to retire in 10 years, you should have something in the more solid base there. At the minimum, 20 to 30% of the portfolio. Again, you could take the risk quiz. You can go to talkingrealmoney.com, take a risk quiz. That would
you
help
need to do that,
understand.
by the way.
That's a lot. That's very aggressive. So what's the international component, Don?
It's Fidelity Total International Index, which is FTIHX, and that has a whopping
FTIHX.
6 basis points in fees.
That is so inexpensive. So then you would balance between those two funds. You'd sell out of the
At 50-50.
Fidelity Growth, yeah, and then go 50-50 there. But then you need something in bonds. They must have an intermediate term bond fund that is mostly governments, that kind of. I mean, they've got to have something. But
They have a total bond market a total bond
Yeah.
index, which hold on, I just lost.
no,
I
you
saw
did.
that it was a corporate bond index.
No, we don't want to own corporates.
Well, it'll have
because
some
you already
corporates
own
in
that
it.
stock. It'll have some, but the majority will be 60 or so percent would be in U.S. government bonds because those have been more reliable in paying you back.
It's amazing how much more expensive the bond funds are now than the stock funds. Oh, golly, I got to find another one. 0.45%. And the stock
What?
funds are 0.01.
On their total bond?
Yeah, their total bond. Hold on, I'm going to find
No,
something
that
else.
doesn't make sense. But do you understand what we're saying about sort of
Yeah.
reallocating the stock side and determining how much of your money should be in stocks versus how much in bonds or fixed income? Because that's the first thing to decide before dividing this up between U.S. and international.
I got it now. The Fidelity Intermediate Treasury Fund.
What's the ticker?
FUAMX, 3 basis points.
FUAMX.
3 basis
Oh,
points.
there you go. So you got the FSKAX, that's the total U.S., the FTIHX, that's the total international, and then the FU, careful the way you say that, AMX
Yeah.
is the bond portfolio.
yeah.
They divide it up
And
between
if-
those, take the risk quiz, determine where you are, and then
If
get
you
on
went with a
it. So-
60-40, 60% in stocks, which would be 30-30, and then 40% in the bond fund,
Yeah.
your average annual expenses are going to be about 1.9 basis points.
That is,
0.02 of 1%.
less, it's about a quarter of what you're paying today.
Oh, no, less than. Oh, he's paying 0.85
85
now.
basis
85.
points, yeah.
So he's paying 2 basis points. 2.
Crazy.
Not 20. 2. Holy mackerel. 855-935-TALK.
Tom and Don are talking real money.
It may not be the sexiest website in the world, but it's your one-stop shop for real money information. TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Starting route. Tom was getting directions home already. He is ready
Apparently
to go.
So. Well, it's not looking too good. I may stay here, just wait out the snowstorm or something, so we'll see.
The snow doesn't start till like Tuesday or something.
I know. You plan ahead on these things.
Of course
here
you
in
do.
Seattle, the threat of a snowflake,
you do.
and you shut down. The city just goes, forget it.
All right, I want to give you a phone number while he gets his directions home. It's 855-935-TALK, 855-935-8255. Do me a favor.
Yeah?
Go to your files or your piles. You could have files or piles, but you have one or the other, and you got paperwork in there. Let's get your portfolio right, shall we? 855-935-TALK, 855-935-8255. Because, well, here's the thing. I'm going to start by telling you, we love you. We love you. You know, isn't that, you hear a conversation, somebody says,
Yeah.
I love you, but
don't trust you.
I
don't
love
believe
you, but are you listening? I love you. Really, we do. We love you. You, the listener, we love you. But are you listening? We keep getting calls. We keep seeing people in the office who have these bad portfolios. They don't look anything like what we talk about. Not anything like what we talk about.
Because here's why I think it is.
Yeah?
It's inertia.
Really?
I bought something 10 years ago, and it's just a lot of trouble to move it. It's a lot of work to do this or that, and it's okay. It's made money.
Well, that was Scott's argument.
Yeah,
you know,
right.
I've made money.
And it has.
And
Yeah.
wow, Scott, your timing was not
I think
great.
it's-
Your luck was off the charts.
Yeah, I mean, it's a good time to rebalance, to buy some of the things that have not gone up as quickly.
Right.
As
we
large
did.
growth stocks.
Wait, well, that money, that was in a qualified plan. So he doesn't even have tax issues to deal with. No, that's perfect.
No, exactly.
That's
Yeah.
perfect. But
Sell it
here's
and
the thing. We
rebalance.
see one of two kinds of portfolios. We see either I've had this one or two funds forever, and I never did anything with them because I just don't want to mess with it, like Tom said. Or more often than the other is this one, the hodgepodge, where you buy whatever seemed good at the time, and then you leave that one there. And then you buy this other one that seemed good at the time, and then you leave that there, and then you buy this other one, and you leave that there, and you buy this other one, and you leave that there, and then you look back and you go, I don't have a clue what I own.
You own a series of ideas, not a purposely constructed portfolio. By the way, it's not hard to figure this out. I think even your wife mentioned when I was talking about Japan. Yeah, I bought Japanese.
She did.
A Japanese fund in 1988. It was great. Yeah, okay. That was an idea.
And she still owns it.
Yeah, and which probably, other than the last 30 years, been really good. Just got to hang on for another 30 years. No, I mean, so yeah, that was an idea, right? Because it was all about Japan then. Wasn't there another thing that was really hot in the late 1990s? I think it was technology. That was it.
Oh, yeah, I remember that.
.coms, what was the one that delivered a can of Coke for 99 cents? I mean, all those kind of things.
Oh, those are now
pet ones.
DoorDash or
Pet
Grubhub.
ones, Grubhub, yeah, that's not looking too great either. Especially Grubhub. But a series of ideas, because something came along and seemed to make sense at the time. And then it worked out for a bit, and then I just sort of forgot about that. And then the new idea came along.
Oh, I thought of a really good one. How many of you remember America Online?
I can make that sound if you want me to.
America Online. Time Warner bought it for like
Yeah.
billions and billions of dollars. And
How's that working
it's worth
out?
like
Yeah.
22 cents now.
I know. But there's still a lot of people that use AOL, by the way.
Really?
Shocking.
I know. It
Oh, yeah.
surprises me. It's like Hotmail. Really?
They just
You
like that
still have
sound.
a Hotmail account? 855-935-TALK. How many times has Microsoft come up with a new name for their email?
They'll come up with another one.
855-935-8255 is our number. Give us a call. We'll fix your financial mess.
Tom and Don are talking real money.
Download the advisor interview form and find out if your advisor's a fiduciary at talkingrealmoney.com.
Reality radio for a really great future. We're talking real money.
Hello again. Welcome back. I'm Don. That's Tom. Our number is 855-935-TALK, 855-935-8255. And when the Seattle weather forecast calls for cold air to come barreling down, I figure in the Seattle area it's going to be barreled in a nice charred oak bourbon barrel just to give it a nice oaky flavor. Sorry. It's really bad.
Yeah, that's
An oaky barrel of cold air.
yeah, just rolling right in.
Roll in the barrel. We'll have a barrel of cold.
Yeah, I'm going to stay in my house.
You
I'll
will
see you
too,
next
because
Saturday. I will
you've
too.
got
Bye.
you've got the killer hill.
I know.
That hill ice is
My daughter
over.
last night was like, just leave your car at the top of the hill. I said, I'm kind of old. I'll just leave me at the bottom of the hill. I don't need that.
When you get toward the turn to the right there, just put your foot out, open the door, put your foot out, and spin on that one foot. Just pivot on that foot.
Yeah. Remember the part about old and spinning? I don't want to do that.
And that'll take you right off into the wetlands.
We have a new book to write anyway. I'll sit and write.
Are you going to actually write?
I'm actually going to write. I've actually been working on it already. So
Really?
yeah, I have.
Okay. I can't wait to see
Christmas morning at 5 a.m. when nobody else.
He's writing
not
a
creature
Christmas
was
book.
stirring. There you go.
855-935-TALK. Let's go to the phones because this is deteriorating. John, welcome to
Badly.
Talking Real Money.
Hey, John.
Hi. Hello.
Hello.
Hey.
Go ahead.
Well, in this terrible, terrible weather, I'm sitting up on a road called Deer Park, which goes into the Olympic National Forest
Wow.
in Port Angeles, outside of Port Angeles.
Oh, it's nice
And
there.
I'm looking for my adult son who has schizophrenia and has run away, and I'm desperate and can't find any help to find this kid.
Okay.
This is not a scam.
No,
This is
I
true.
believe you. I totally believe
Trying
you.
to figure. You've called the local authorities for help?
I have called them, and they came up. The sheriff department came up and drove the road twice, gave me a lecture that they can't do anything because he's 21.
Yeah, right.
Although he has a medical hold on him at the emergency room waiting for a
Okay.
bed.
Well,
but of course
hang
they
on.
can't
Let's
do anything if he doesn't want to.
let's do this. We only have a half an hour, but if you describe him, there are people out driving the peninsula
Good
right
point.
now.
Good
Tell
point.
us what he looked like when he left the house.
He is 6 foot tall. He has a black beard. He's in a hospital gown.
Well, that should be easy to spot.
Tan light jacket and tennis shoes.
Where was he last seen? What area?
About 1,500 foot level near the entrance to Olympic National Park on the Deer Park Road.
Okay.
It's all wooded and nothing else around.
Could we just, Tom? Could we put him on hold, and see if Jeff could grab him?
Yeah, we'll try that.
And
sure, it's a good idea.
And see maybe if Como can help a little bit.
Sure.
Because if you've seen a 6 foot tall man in a hospital gown near the Blackbeard Olympic National Park, call us, and then we'll get you another number we'll give on the air if Jeff will allow it.
Yeah.
Okay. But we'll check with Jeff. We'll try to help
Sorry.
you. We really will.
I hope the rest
so
of the weekend's
sorry.
better, John. Yeah,
I'm
no, it's
really
horrible.
sorry. I know how awful that can be. I truly know how awful that can be. We wish you the best, and we'll see what we can do to help. We're going to put you on hold, so hang in there. We'll get somebody to talk to you. 855-935-TALK. That's our number, 855-935-8255. And Sylvia, you're next. Welcome to Talking Real Money.
Hi, Sylvia.
Hello, how you doing?
Good.
I was just wondering, I have two mutual funds here. I'd like to know what the ETF symbol is equivalent. I have VSMAX, which is the Vanguard Small Cap Index Fund Admiral shares, and also the VFIAX, the Vanguard 500 Indexed Admiral shares. Those are mutual funds. I need to know what the ETF equivalent is for those.
I'm looking.
Well, Don's doing that magic thing that he does called the World Wide Web.
The World
So why do you want to
Wide
own the exchange-traded fund instead of the mutual fund, just out of curiosity?
Oh, because I'm in TD Ameritrade, and then there's no commission.
Got it.
Okay,
So you want?
that makes
Do you
sense.
want the small cap general fund, or you want small cap value?
IAX is just small cap, I
Just
believe.
small cap. Yeah, I just want to check. Okay.
Small cap.
If you
Okay.
hang on, we'll give you the tickers.
I'm working on those tickers as we speak. I'll have them for you in just a minute. 855-935-TALK is our phone number, 855-935-8255.
Tom and Don are talking real money.
Just about everything you need to know about money can be found at our website, talkingrealmoney.com.
For your real life and real future, Tom and Don are talking real money.
Really important stuff. Remember, you can call us 24 hours a day, 7 days a week, too, at that number, 855-935-TALK, 855-935-8255. We're talking to Sylvia. She wanted the ticker symbols for the Vanguard Small Cap ETF and the Vanguard 500 ETF. And Sylvia, VB, V, Victor Boy, is the small cap. VOO, VOO, is the S&P 500, the Index 500 fund. You might also want to include, though, VBR, which is the Vanguard Value, Small Cap Value ETF, just a little of that to give you a slight overweight to value, which we believe can be valuable.
And if you've listened to the show, you know we favor VT. V is in victory, T is in Tom, because that is the Vanguard Total World Stock Index. But I like your strategy because you're going to get a little more small. You're going to get a little exposure to other parts of the market by owning that small fund. You have that in the VT, but it's just such a tiny little bit of it. So
I'd add a little value to even overweight further if you're going to do that already.
Good.
Quick note.
Does that help?
UX. Mm-hmm.
Does that help?
Yes, it does. Mm-hmm.
All right.
Yes.
Thank you.
Happy New Year. Thank you.
Got a quick note on John's situation.
Yes.
Well, here's what we're going to do. We're going to give you the Como News tip line. If anyone sees John's son, who has left a facility, he's 6 foot tall with a black beard and a hospital gown. He was last seen about at 1,500 feet at the entrance to Olympic National Park.
Deer Park, yeah.
If you've seen him, call the Como tip line, which is 206 404 4145 206-404-4145. Help John out.
Yeah, let's help them out if we can. I mean, that is a
absolutely
hard story to hear. Yeah, indeed.
All right, let's go spend some time with Alice. Alice, welcome to Talking Real Money.
Hi.
Hey.
I maybe like 20 minutes ago you had a caller, and I missed the beginning of your feedback to him, but you the last thing that you recommended was bond fund exposure, and you started out saying the total bond, Vanguard total bond.
No, we started out saying Fidelity total. He was
Because
at
there's money in
Fidelity.
Right,
Fidelity.
I'm sorry.
No, that's all right.
You're right.
Yeah.
You're right. And then but you landed on the Fidelity intermediate Treasury
Yes, ma'am.
bond instead. And why?
Expenses, dramatically lower expense ratio. The other thing about the Fidelity Total Bond is that it has corporate bonds in it, which we'd rather avoid, but it's okay to have them. But when you have an extra 0.25% in expenses with bonds, that makes a huge difference.
Well, let's point something out. I mean, the bonds in the Fidelity Total Bond yield, I didn't look up the yield, but it can't be much over 2, I'm guessing. The expense ratio of that mutual fund, 0.85, is outrageous.
No, that was the Fidelity. That was the Fidelity Growth Fund that was 0.85.
Oh, okay.
The total
But it was
bond fund was
0.45.
0.45, which is really high.
Yeah,
And
you could own the other, the intermediate term for, I think you said 3 basis points,
3
right?
basis points, correct.
That's
And-
so much
And
less.
let me just compare.
I mean,
let me compare those yields.
and I think Scott Burns did a great study in the Wall Street Journal probably 10 years ago that pointed out the number one factor in bond fund portfolio difference is expense ratio.
Absolutely.
I mean, because you're just paying all that extra money for really Nothing that I know of.
Yeah.
I mean, somebody's picking the bonds and timing markets, but it doesn't pay off.
The Fidelity Intermediate Term Treasury Bond Fund is a very safe vehicle. It's 100% U.S. Treasury securities. It is of short enough duration that we don't worry about much impact from rising rates when it happens someday. And its yield is 1.8.
That was close. Yeah, go ahead.
And the yield on the total bond is 2.5.
Yeah, it's not worth it. So FUAMX is the Fidelity Intermediate Term Bond Fund. Government bond fund.
Treasury bond fund. Treasuries. Yeah, it's treasuries
That's
too.
my favorite.
By the way,
Yeah,
it's treasuries, which is even better because it doesn't have mortgage backed. It doesn't have agency paper.
Good point.
Because there's full faith and credit of the U.S. government, and then there's government backed.
Backed. Yeah, whole different thing to pay attention to.
And
does that help?
Would you, if I'm in Vanguard, would you lean in the same direction instead of the total bond?
Good question. Good question.
No. Probably not, because
Vanguard total bond, VBMFX, I believe.
I want to pull it up here.
Keep doing the tickers.
VBMFX. Let me pull it up here.
I think I'm right about that.
You are good.
I'm on today.
Actually, that's the investors version, but that's okay.
Yeah, not the.
Let's pull up total bond.
Tell her why we would still be okay with the Vanguard total
because
bond.
its expenses are so much lower.
It's
so
10
much
10
lower.
basis points?
I think it's even lower than that with the Admiral shares. Let me pull the Admirals up here. Just taking a minute to load.
Frankly, Fidelity's just way overcharging.
Basis points.
Yeah. It's so much less. Yeah, I would just own that one. Do you have you have some corporate exposure?
You have some.
Not much. A little bit.
And they're not taking as much risk. They're not stretching for yield.
Yeah.
Like the Fidelity has to stretch for yield to cover those extra expenses, which ups the risk. We know that Vanguard's is not stretching for yields, and their portfolio the yield reflects it. The quality is higher. The expense ratio is very low. There's a lot of things you have to balance. It's not could I go with the Fidelity total bond? Absolutely. But do I think if you're at Fidelity, the intermediate Treasury is better? Yes.
Does that help?
Yes, a lot. Thank you.
A lot of info there. Thank you for listening. Yeah.
855-935-TALK. We're getting near the end.
Coming up to the end.
Yeah,
and I do want to mention, we mentioned this earlier, that if you want to join us for Retire Meet, it's coming up faster than you think. Saturday, February 22nd in Bellevue. You can buy a morning session ticket or an afternoon session for those of you who are more like Don that like to roust out about 1 or 2 in the afternoon. That's a perfect one for you. And he's not going to apologize for it either. He's not apologizing for that.
Whereas Tom, out of bed at 3:30 sharp every morning.
Ready to go.
He should be doing morning news shows.
Exactly. Well, it still might. But join us. You are going to get in a 4-hour session, morning or afternoon, a ton of information on everything from long-term care to investing for retirement to how to set up retirement income to getting Social Security right, to getting inspired in retirement by the great Paul Merriman, to how to invest from Apollo Lopescu, the PhD who can do this in a way that you'll understand, to estate planning and all those sorts of things with Rick Gregorick. It is truly, we have sold out every one of these 5 years in a row.
Yep.
And the reason why is because people love it.
It's good stuff.
And it's
is
interesting and
the
fast.
Prices are great right now because you can get
What is the price now?
Well, it's $25 at the door for a single to get tickets. Just if you end up coming to the door and we get you in, it's $25. But right now, if you buy it before the end of January, it's $15 for a single. Even better though, if you're a couple, it's just $25 for a couple.
RetireMeet, MEET.com. RetireMeet. And by the way, we will not be here next Saturday. We are preempted by basketball.
I'm
sorry. Yeah,
I like
find something
being
to do on the
here.
holiday weekend.
It's a holiday?
Me too. It is.
855-935-TALK works 24 hours a day. Call.
Tom and Don are talking real money.
Would you like to talk to a real investment advisor for free? Set up an appointment at TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
And for those of you who live outside of the Seattle area, come to Retire Meet in the winter. Hotel rooms are cheaper. It'll be a nice bracing vacation. Get your tickets now at retiremeet.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?